Hey everyone, welcome back to the channel. Today's topic is something that affects every single one of us, whether you've got $100 in the bank or 6 figures sitting in a savings account. We're talking about your money, and more importantly, whether it's actually safe in 2025. With all the noise out there, bank closures, inflation, interest rate changes, even the rise of digital currencies, people are starting to ask real questions. Should you be worried? Are there risks the banks aren't telling you about? What are the hidden dangers you should be paying attention to right now? In this video, we're breaking it all down. No fear-mongering, just facts, context, and some seriously eye-opening insights. So let's get into it. Now, if you're thinking, hey, the banking system is regulated, insured, and totally safe, right? You're not wrong, but you're also not entirely right. Yes, traditional banks are regulated. Yes, your money is insured up to a point. But the key phrase here is up to a point. For example, in the US, the FDIC insures up to $250,000 per depositor per bank. That sounds like plenty for most people. But what happens if you have more than that across multiple accounts? Or what if you're in a country with weaker financial regulations? And more importantly, what happens before those guarantees kick in? Let's rewind to 2023 and early 2024 for a moment. Do you remember when several mid-sized banks in the US suddenly collapsed almost overnight? Silicon Valley Bank, Signature Bank, and a few others sent shockwaves through the financial world. These were institutions people trusted, with billions under management, and yet they crumbled in a matter of days due to poor risk management and exposure to interest rate shifts. Here's the scary part. These weren't just isolated incidents. They were signals. And now, in 2025, the game has changed again. Fast. One of the biggest hidden risks right now is what's going on behind the scenes with government debt and interest rates. In many parts of the world, central banks spent the last few years fighting inflation by raising interest rates aggressively. While this helped cool off some parts of the economy, it created stress for banks holding long-term low-yield assets. Basically, banks that had lent out money or bought bonds when rates were super low are now sitting on losses. That wouldn't be a problem if they could hold those assets until maturity. But in reality, if too many customers withdraw their money at once, like in a bank run, those banks are forced to sell at a loss. That's exactly what happened to Silicon Valley Bank. And yes, it can happen again. But that's just one part of the puzzle. Another risk most people don't think about is how banks actually use your money. When you deposit funds into your checking or savings account, that money doesn't just sit there in a vault with your name on it. Banks lend it out. They invest it. They leverage it. This is called fractional reserve banking. And it means that for every dollar you deposit, the bank might only keep a small percentage, sometimes as low as 10% in reserves. The rest is out in the world, earning them profits. So technically, if everyone came to withdraw their full balance at the same time, the bank wouldn't be able to cover it. That's not a conspiracy theory, that's just how the system is structured. Now let's talk about another growing concern, cybersecurity. It's 2025, and everything is digital. Your account info, your transactions, even your identity. Banks are high-value targets for hackers, and while major institutions spend billions on cybersecurity, breaches still happen. Whether it's ransomware, phishing scams, or data leaks, the risk is real. In fact, in the past year alone, several major financial institutions reported attempted breaches, and some smaller fintech platforms actually lost customer funds. It doesn't even have to be a full-scale attack. Sometimes it's just poor infrastructure or third-party vulnerabilities. And the problem with digital exposure is that once your data is compromised, it can open the door to identity theft, unauthorized transfers, and credit fraud. There's also this massive shift happening that a lot of people still aren't paying attention to: the rise of central bank digital currencies, or CBDCs. Countries like China have already rolled out digital versions of their national currency. The US, EU, and others are experimenting or in testing phases. On the surface, CBDCs sound convenient: instant transfers, secure payments, and reduced reliance on cash. But think about what else they allow: total visibility and control over how, where, and when your money is spent. In extreme cases, that could mean freezing assets, limiting purchases, or enforcing penalties based on behavior or policy. I'm not saying that's going to happen tomorrow, but the potential is there. And once the infrastructure is in place, there's no going back. It raises important questions about financial freedom, privacy, and who really controls your money. Another issue we need to discuss is inflation, and more specifically, silent inflation. Sure, you might see inflation rates reported at 3%, 4%, or whatever the central bank claims. But when you go to the grocery store or try to rent an apartment, it often feels way higher. The truth is, the value of money is shrinking over time, and that has a direct impact on your savings. Keeping large amounts of cash in a savings account earning 1 or 2% interest while inflation quietly eats away at 5% of your purchasing power? That's not saving. That's losing money slowly and quietly. This is a risk most people don't even realize they're taking. And in 2025, it's more important than ever to have a strategy that actually protects your capital, whether that's diversifying, investing, or even using inflation-protected assets. Now, let's not forget about fintech platforms. Everyone loves them for their convenience. Apps like Revolut, Chime, Cash App, or Wise make banking feel easy and modern. But many of these platforms are not banks in the traditional sense. They partner with banks or they operate under different types of financial licenses. This means the protections you assume you have, like FDIC insurance, might not apply in the same way. And if one of these platforms goes under, or gets hacked, or freezes your account for suspicious activity, you could find yourself in a nightmare trying to recover your funds. In 2025, people need to read the fine print. Don't assume that just because an app has millions of users and a slick interface, your money is safe. So what can you actually do to protect yourself? First, diversify your accounts. Don't keep all your funds in one bank or one platform. Spread it out, especially if you're holding more than the insured limits. This way, if one institution faces issues, you're not completely frozen out. Second, consider holding a mix of assets, not just cash. That could be stocks, bonds, real estate, precious metals, or even stable, high-quality crypto assets, depending on your risk tolerance and understanding. Third, enable two-factor authentication and monitor your accounts regularly. The more proactive you are with security, the less likely you are to be a victim of cybercrime. And fourth, educate yourself. Financial literacy is not a luxury anymore. It's survival. Read the terms, know how your bank operates, understand the fees, and stay informed about policy changes or new digital currency developments. Look, I'm not here to scare you. I'm here to wake you up. The financial world is changing fast, and the rules that worked 10 years ago, or even 5, might not protect you in today's landscape. Your money is still yours, but how safe it is depends on the choices you make. Don't just trust the system blindly. Question it, understand it, use it smartly. If you made it this far, I really appreciate your time. Drop a comment below. What's your biggest concern when it comes to your money in 2025? Have you noticed changes in your bank's policies or security? Are you considering moving your money or diversifying your assets? Let's talk about it, because the more we share, the smarter we all get. If you found this video helpful, please hit that like button. It really helps the channel. Subscribe if you haven't already, and hit the bell so you don't miss future videos about financial security, investing, and how to stay ahead in this fast-changing world. Thanks again for watching, and I'll see you in the next one. Stay safe, stay informed, and remember, you are your own best protection when it comes to your money.